Hey everyone, and welcome back to the Safe Simple Sound podcast, College Planning Edition. I'm your host, Sam. Thanks for tuning in as we explore ways to make your financial journey, well, safe, simple, and sound. Today we're tackling a topic that causes a lot of questions, especially around tax time, education funding. Specifically, we're diving into the tax implications of scholarships, grants, and tuition reductions. It's fantastic to get financial help for school, but the big question often looms: do you owe taxes on that money? Our discussion today is grounded in the details found in IRS Publication 970, Chapter 1, which specifically covers tax benefits for education. We've distilled the key information, much like in the helpful summary article we based this episode on. Got education money? Let's talk taxes on scholarships, grants, and tuition reductions. Now, a couple of key things jump out right away from this information. First, the good news: many scholarships and grants can indeed be tax-free. But, and it's a big but, there are specific conditions you absolutely need to meet. Second, understanding what the IRS considers qualified education expenses is critical because using that money for other things like room and board can make it taxable. And finally, we'll also touch on those valuable tuition reductions some folks receive through their jobs at educational institutions. They have their own set of rules, too. Knowing this stuff is crucial. It directly ties into our core beliefs here at Safe Simple Sound, particularly seizing financial control and understanding financial choices. When you understand the potential scholarship tax or grant tax implications, you can plan better, avoid surprises, and truly manage your finances effectively. Our goal today is to simplify these IRS rules and give you that sound understanding. We know taxes can feel complicated, but understanding how they apply to your education funding is empowering. Get ready for a clear, straightforward discussion to help you navigate these rules with confidence. We're going to break down the basics first. We'll be looking specifically at what IRS Publication 970, their guide on tax benefits for education, says about scholarships and grants. So, let's get straight to the core question. Is that education money you receive tax-free? Okay, first things first. Let's start with the good news. Generally speaking, scholarships and fellowship grants can absolutely be tax-free. Phew, right? That helps ease the initial scholarship tax panic many students and parents feel. The goal here is often to secure a tax-free scholarship. However, and this is important, it's not automatic. There are specific conditions you need to meet for that money to stay out of Uncle Sam's reach. So, what are these magic conditions? There are two main ones we need to unpack. Condition number 1, you have to be a candidate for a degree at an eligible educational institution. Okay, let's translate that from IRS speak. Candidate for a degree basically means you're actually enrolled in pursuing a degree, like an associate's, bachelor's, master's, or even a PhD at a college or university. It also includes students in primary or secondary school or those in certain vocational programs designed for gainful employment. An eligible educational institution? Think accredited colleges, universities, vocational schools, and even elementary or high schools. Essentially, it's a legitimate school. Now you might wonder, how do I know for sure if my school qualifies? That's a great question. The simplest way is usually to check with the school's financial aid or registrar's office. They'll know their status. The IRS also has tools on their website, but the school itself is often the quickest confirmation. So if you're taking a one-off weekend workshop for fun, a grant for that probably won't meet this condition. But if you're enrolled and working towards that diploma or degree, you likely check this box. Condition number 2. This is the big one where things often get tricky. The scholarship or grant money must be used for qualified education expenses. Understanding this piece is absolutely critical if you want to maximize the tax-free benefit of your aid. So what exactly counts as qualified education expenses? The IRS is pretty specific here. It generally includes tuition and fees required for enrollment or attendance. That mandatory student activity fee usually counts. And books, supplies, and equipment that are required for your courses. Think textbooks for that history class, specific software needed for your engineering course, or maybe lab equipment mandated by your science professor. Now, just as important is knowing what doesn't typically count as qualified education expenses. This is where people can sometimes trip up. Generally excluded are things like room and board. Yep, even if you live in the dorms or have a campus meal plan, funds used for this are usually not considered qualified expenses for tax-free scholarship purposes. Travel. Costs of getting to and from campus or study abroad travel? Generally not qualified. Optional equipment or personal expenses. That new laptop you wanted but wasn't required for any specific class? Probably not qualified. Same goes for things like notebooks you could use for any purpose, transportation, or other living expenses. Think about it like this. If the expense is directly for your enrollment or a mandatory requirement for a specific course, it's more likely to be qualified. If it's for living, convenience, or personal choice, it probably isn't. Now, how do you keep track of all this? That's a fantastic practical question. The best way is meticulous record keeping. Keep receipts for required books and supplies. Save your tuition statements. You need to be able to show, if asked, that the scholarship funds were used for these specific qualified costs. And what about those gray areas? Sometimes it's fuzzy. Maybe a piece of tech is highly recommended, but not strictly required. These situations often depend on the specifics, and it highlights why understanding the terms of your specific scholarship and the requirements of your courses is so important. So, to recap the basics for today, scholarships and grants can be tax-free if you're a degree candidate at an eligible school and you use the money strictly for qualified education expenses like tuition, required fees, books, and supplies. Money used for things like room and board generally makes that portion of the scholarship taxable. Okay, here's your homework from this segment. Review the terms of your specific scholarships and grants. Did they come with any strings attached about how the money should be used? Double check, are you officially a degree candidate according to the definitions we talked about? And start really thinking about how those funds line up, or maybe don't line up, with those qualified education expenses. Getting clear on this now can save you headaches later. Understanding these basic conditions is the foundation. But what happens when things don't fit neatly into these boxes? What about scholarships that require you to work, or funds specifically given for room and board? That's exactly what we'll tackle next. Coming up, we'll dive into the common situations where education money does become taxable scholarship income or taxable grant income. Most things with taxes, there are nuances. It's not always straightforward. So, in this segment, we're diving into the watch-outs, those common situations where your education money can actually become taxable scholarship income or taxable grant income. It's crucial to understand these exceptions to avoid any nasty surprises come tax time. So let's break down the main reasons why that aid money might land on your tax return. First up, payment for services. This is a big one, especially for graduate students or those with certain types of assistantships. If your scholarship or grant requires you to do work in return, think teaching a class, conducting research for a professor, or maybe administrative tasks, then the portion of that money paying you for those specific services is generally considered taxable income. Think about it this way. If you're getting paid to do a job, even if it's tied to your education funding, the IRS often sees that as wages. So for students getting those research or teaching assistantship stipends, how is that line drawn? The key is whether the payment is primarily to enable your studies or if it's compensation for work you're performing. If it's for services, you should actually expect to receive a Form W-2 from the institution, just like you would for any other job, reporting that income. Okay, exception number 2, using the money for non-qualified expenses. We touched on this in the last segment, but it bears repeating because it's probably the most common mistake students make that results in their aid becoming unexpectedly taxable. Remember those qualified education expenses? That's generally tuition, mandatory fees, and required books, supplies, and equipment. If you take part of your scholarship or grant, money that could have been tax-free if used for tuition, and instead use it to cover your rent, pay for groceries, travel home for the holidays, or, fund that spring break trip, that portion generally becomes taxable income. So if you get a $10,000 scholarship, use $8,000 for tuition and required books and $2,000 for your apartment rent, that $2,000 needs to be reported as income. It really highlights why tracking how you spend that aid money is so important. Third quick exception, non-degree candidates. This one's fairly straightforward. If you receive a scholarship or fellowship grant, but you aren't actually pursuing a degree at an eligible school, the general rule is that the entire amount you receive is taxable. The tax benefits are really geared towards supporting formal degree-seeking education. Now, besides those main three, there are a couple of other scenarios to be aware of. Sometimes certain grants, especially in fields like medicine, might require you to perform future services after graduation, with a hefty penalty if you don't follow through. Depending on the specifics, these might be taxable in the year you receive them. And let's talk about athletic scholarship tax rules. This is a big question for student athletes. While athletic scholarships can be tax-free, just like academic ones, it's only up to the amount covering those qualified education expenses: tuition, fees, required books, and supplies. What if you get a full ride that also covers room and board? That portion specifically covering room and board is generally considered taxable income. So, how should students approach these? You need to understand what the scholarship covers and be prepared to report the portion allocated to non-qualified expenses like housing and meals as income. Feeling a bit overwhelmed trying to figure out what's taxable? The IRS actually provides a tool, Worksheet 1.1 in Chapter 1 of IRS Publication 970, Tax Benefits for Education, that can help you calculate the taxable portion of your scholarship or grant. So let's quickly recap the main watchouts: getting paid for services as part of your aid package, using funds for non-qualified expenses like room and board, receiving aid when you're not seeking a degree, and specific cases like athletic scholarships covering more than just tuition and fees. This brings us to our key takeaway and call to action for this segment. Carefully track how you spend your scholarship and grant funds. Keep receipts, know what your award letters cover, and if any part of your aid requires you to perform services, make sure you understand how that income will be reported to you, likely on a W-2, and consequently to the IRS. Being proactive here can save you a lot of headaches later. In our last segment, we dug into some situations where those helpful scholarships and grants might actually count as taxable income, especially if they involve payment for services like teaching or research. That idea of payment for services is a really important bridge to our next topic, which is another fantastic form of educational assistance, but one that's often specific to a certain group: tuition reductions for employees of educational institutions. So let's talk about Segment 3. Employee perk? Tax rules for tuition reductions. If you, your spouse, or maybe even your parent works for a university, college, or another type of school, you might be eligible for a pretty sweet deal: reduced tuition costs. It's a fantastic benefit, but like everything else involving money in education, we need to understand the tuition reduction tax implications. The great news up front is that, generally speaking, a qualified tuition reduction provided by an eligible educational institution to its employees or their spouses and dependent children is not included in your gross income. Phew! Think of it less like getting paid extra money and more like getting a significant discount on a very expensive item, tuition, because of your connection to the institution. For the most part, the IRS views it this way too, meaning no extra income tax is typically due on that benefit. Now, generally always means there are conditions, right? So what makes it a qualified tuition reduction? First, the benefit has to be offered by what the IRS calls an eligible educational institution, basically a legitimate school with regular faculty, curriculum, and enrolled students. Second, the tax-free status primarily applies to undergraduate education. Now, there can be exceptions for graduate students, but that's where things get a little more complex, often tying into our next point. And third, there are non-discrimination rules. This basically means the benefit plan generally can't favor the highly compensated employees, owners, or officers over other employees. This is something the institution needs to manage, but it's good to be aware it exists. If you're ever really concerned about this specific aspect, your HR or benefits department would be the place to ask how the plan complies. Okay, remember how we talked about scholarships becoming taxable if they were really payment for services? The exact same logic applies here. This is the big exception for tuition reductions, and it often impacts graduate students. If receiving that tuition reduction requires the student, whether that's the employee, spouse, or child, to perform services like teaching, research, or other work for the institution, then the amount of the tuition reduction that represents payment for those services is generally considered taxable income. Example, imagine a graduate student who works at the university library gets a tuition reduction. If that reduction is just a general employee benefit available to many staff, it's likely tax-free. But if a different graduate student gets a tuition reduction, specifically tied to a requirement that they must teach an undergraduate course or work 15 hours a week in a research lab as a condition of receiving that reduction, that tuition benefit starts looking a lot like compensation, and the IRS will likely view it as taxable. Does this resonate with anyone? Maybe you're a grad student balancing teaching duties with your studies, or perhaps you work at a university and your child is thinking about attending. It's worth pausing to consider. Is the tuition benefit you or your family member receives tied directly to required work? So, who typically gets to enjoy this potentially tax-free benefit? Eligibility usually extends to current employees of the educational institution, retired employees, employees who left on disability, and importantly, the spouses and dependent children of these eligible employees. Now, a quick note on something folks sometimes ask. What about using the tuition reduction at a different school? While the core IRS rule focuses on reductions offered by the employing institution for study there, some schools have reciprocal agreements. The tax treatment in those cases can depend entirely on the specific plan's details. Again, the key is in the fine print of your specific benefit plan. So, let's quickly recap the key takeaways for tuition reduction tax rules. It's often a tax-free benefit for employees of eligible educational institutions and their families, primarily for undergraduate studies. Watch out for the big exception. If the reduction is payment for services required of the student, it likely becomes taxable income. Eligibility usually covers current, retired, and disabled employees, plus spouses and dependents. Graduate student reductions and benefits used at other institutions often have more complex rules tied to that payment for services idea and specific plan details. This brings us to our call to action for this segment. If you or a family member receives a tuition reduction benefit, review the plan details provided by the employer to understand its specific terms and potential tax implications. Don't just assume it's tax-free. Know the specifics of your plan. Okay, we've covered scholarships, grants, and now these employee tuition reductions. We know what's generally tax-free, what exceptions can make them taxable, and who might benefit. But the million-dollar question, or maybe the few $1,000 tax question, is how do you actually handle this on your tax return? What if you do have taxable income from these sources? And where can you find reliable resources? That's exactly what we'll tackle in our next segment, Reporting and Resources, Filing Your Taxes Correctly. So, you've navigated the financial aid process, secured some funding. Fantastic! But now we need to make sure Uncle Sam gets the right information. This is where we bring it all together. Let's talk about actually reporting scholarship income and other educational funds on your tax return. First things first, remember how we talked about some aid being taxable? Especially if it's payment for services like a teaching assistantship, or if you used grant money for non-qualified expenses like room and board? Well, how you report that taxable portion depends on how you received the information. If your scholarship or grant involved payment for services, maybe you did research or taught a class, the institution likely sent you a Form W-2, just like for a regular job. In that case, that income just gets included with your other wages on your Form 1040, typically line 1A. Simple enough, right? It's treated like any other earned income. But what if part of your scholarship is taxable? Say you used some for personal travel or rent, but it wasn't reported on a W-2. This is super common. That taxable amount doesn't just disappear. You need to report it yourself. This is where you'll generally use Schedule 1 with your Form 1040. Specifically, you're looking for Line 8R, which is often labeled something like scholarship and fellowship grants not reported on Form W-2. Think of Schedule 1 as the place for additional income, and that's where this taxable grant reporting, Schedule 1, finds its home. It ensures you're accounting for all taxable income even if it didn't come with a standard W-2. Now, how do you even know how much was taxable, or prove how much was tax-free? This brings me to something absolutely critical: record keeping. Seriously, I can't stress this enough. Throughout the year, you need to be diligent. Think of yourself as a financial detective gathering evidence for tax case your return. What evidence do you need? Keep copies of all your financial aid award letters, every scholarship, every grant, any tuition reduction notice. Keep detailed records and receipts for all your qualified education expenses. That means tuition bills, bookstore receipts for required books and supplies, maybe even invoices for mandatory course equipment. Why? Because the tax-free status of your aid often depends on it being used for those qualified education expenses. If the IRS ever asks, you need proof. Having these records makes calculating any taxable portion way easier and provides backup if needed. So that crumpled receipt for that required $200 textbook? Yeah, keep that. Create a folder, physical or digital, right now. It's also good to know that not all educational assistance falls under the same scholarship grant rules we've been discussing. For instance, education benefits from the Department of Veterans Affairs are generally tax-free. Certain federal emergency grants, like those provided during recent national emergencies for students, were also often designated as tax-free. On the flip side, if you're a cadet or midshipman at a U.S. military academy, those payments you receive are considered taxable pay for personal services. It just highlights that you always need to check the specifics of the aid you receive. And speaking of checking specifics, navigating tax rules can feel like trying to read a map in the dark sometimes. While podcasts like ours aim to simplify, the absolute best place for the nitty-gritty, official details is directly from the source, the IRS. I know, IRS doesn't always scream light reading, but they have a publication specifically for this. Write this down or remember it. IRS Publication 970, Tax Benefits for Education. You can find it easily on irs.gov. Chapter 1, in particular, covers much of what we've discussed today about scholarships and grants. Think of it as the official rulebook. When in doubt, Pub 970 is your go-to reference. So let's recap this segment. We've learned where to report taxable education aid, either with your wages if it's on a W-2, or using taxable grant reporting Schedule 1 if not. We've hammered home the importance of keeping meticulous records of both the aid you received and your qualified education expenses. Those award letters and receipts are your best friends come tax time. We briefly touched on other aid like VA benefits, and crucially, we highlighted the definitive resource, IRS Publication 970, Tax Benefits for Education. Now you might be wondering, what if I messed this up last year? If you think you might have incorrectly reported or failed to report taxable income in a prior year, the best course of action is usually to file an amended return. But that can get tricky, so it's a really good time to consult with a qualified tax professional. They can guide you through the process. And besides Pub 970, reliable resources often include tax clinics offered by universities, reputable tax software help sections, and of course tax professionals themselves. Okay, here's your homework from Safe Simple Sound. Gather your financial aid award letters and receipts for education expenses now. Don't wait until next tax season. Get them organized. Then, head over to irs.gov and download Publication 970. Just browse through Chapter 1. And remember, if your situation feels complex, or if you have specific questions about your unique circumstances, don't hesitate to consult a tax professional. It's often money well spent for peace of mind and accuracy. Phew, that was a lot, but hopefully it brings some clarity to the reporting side of things. Understanding these rules empowers you to handle your finances confidently. And that wraps up our discussion on navigating the tax rules for education funding. We covered a lot today, hopefully shedding some light on a topic that can feel pretty complex. We started with the basics. The good news that much of your aid can be tax-free if you meet the conditions, like being a degree candidate and using funds for qualified education expenses. Then we dove into those important exceptions that can lead to taxable scholarship income or grant tax obligations, such as payments for services or using aid for non-qualified costs, like room and board. We also specifically addressed the tuition reduction tax benefits for employees of educational institutions and rounded it all out with how crucial record-keeping is and the basics of reporting scholarship income if necessary. I think one of the most impactful points, especially for students and parents trying to maximize their aid, is really understanding that distinction between qualified and non-qualified expenses. Knowing that difference is often the key to keeping more of your scholarship or grant money tax-free. Remember, the definitive source for all the details we discussed is IRS Publication 970. We know tackling tax topics isn't always exciting, but understanding these rules truly helps you make informed decisions and avoid surprises, putting you in control of your finances, which is exactly what we champion here at Safe Simple Sound. Thank you so much for joining me today and for being part of our community. I really appreciate you tuning in. Don't forget to check out the show notes for links to resources, including that crucial IRS Publication 970, and a summary of today's key points. If you found this episode helpful, please consider subscribing so you don't miss our future discussions. Leaving a review or sharing the episode with friends or family who might be navigating scholarship tax issues also helps us immensely. Until next time, stay informed, stay proactive, and keep making your financial journey safe, simple, and sound. This is Sam, signing off.